Hi, this is Don McDonald. Welcome to a special edition of Talking Real Money Quick. I call this the Putting Things in Perspective edition because this week has been one of those bad weeks for stocks, not just in the U.S., but around the planet. And there are various reasons why it's doing what it's doing, trade wars, flattening yield curve, all of that. But I'm here to put things in perspective. Because one of the biggest dangers you face as an investor is losing perspective, getting caught up in the excitement, the fear, the emotions of the moment. As I am recording this, the Dow, which I hate, but we use, so I'm going to use that, even though I hate it because it's only 30 stocks, the Dow is in aggregate down about 1,200 points since Tuesday. Wednesday was a market holiday, so that's 800 one day, 400 the next, about 1,200 points. That is less than 4%. As a matter of fact, for the last week, the Dow 30 is down about a little less than 3% for the week. That's not great, but it's certainly not a crash by any stretch of the imagination. The number sounds big because the Dow is never adjusted. Back in 1987, when I know you were a small child, the Dow was about 2,300 points as opposed to almost 25,000 today. So it was a bigger number, and a 100-point, 200-point, 300-point, 500-point decline was actually pretty substantial. Back in October of 1987, in one day, the Dow dropped 508 points. That's over 22%. 508 points actually meant something. Today, 508 points is, less than a couple of percent. So it's not anywhere near the event it used to be. Point drop should be ignored, particularly when it comes to the Dow. Percentages, yeah, that makes sense. But again, it's time to put things in perspective. If you're a real investor, if you're invested in the portfolio that is right for your risk tolerance, if you have planned and created the right portfolio for you, you've got just the right amount of globally diversified stocks and the right amount of bonds so that you are in the area that where you're comfortable with the typical declines for that type of portfolio, then all of this should be a non-event. Nothing. Don't worry about it. Pay no attention. In other words, if you're a real investor, there's no reason to pay any attention, and I don't even need to do this for you guys, hopefully. It's the rest that I'm addressing. If you don't have this plan, if you don't know both your need for risk and your tolerance for risk, then you need to find that out. And go to talkingrealmoney.com. We've got a free risk quiz there, RISQUIZ, of course. That's my branding. Take the risk quiz. Find out. It's free, and there's no obligation. You don't have to buy anything. You're not going to get sold anything. Just take it. Find out. And then build the portfolio based on that level of risk. If you can take a loss of half your portfolio, well, then maybe you can be 100% in broadly diversified equities. Never should you be in an individual stock. And then the number declines from there. And then build the right portfolio. And then leave it alone. And only rebalance or change it when your need for or tolerance of risk changes down the road. Ignore the noise. Stock markets go up. They go down, they go wild, because that is the price you pay for the added returns. And before I let this tiny little episode go, I also want to talk once more about cryptocurrencies, the investment that isn't an investment, like so many investments. I was reading some silly article recently about binary options and how it's an investment, although somewhere deep in the article, the woman who wrote it did say, well, it's kind of like gambling. No, it's not kind of like gambling. It is gambling. Bitcoiners, crypto fiends, it's gambling. I know you have the argument and most of you are young and you don't have much experience in the world of speculation, but crypto is just another speculative vehicle with little or no value. Now, please, I know, before you go nuts, blockchain, the concept, has great potential value. But cryptocurrencies are a solution without a problem. Unless you're some whacked conspiracy theorist and you're all freaked out about fiat currencies. Funny thing, the best cryptos out there are the ones that are linked to fiat currencies. Take a look at Bitcoin. As of the time I am recording this, Bitcoin has dropped from its December 2017 high of $19,282 a Bitcoin to about $3,600 a Bitcoin. That's 81%. Investments don't lose 81%. Gambling vehicles lose 81%. Individual stocks can lose 81%, but I've never said an individual stock is an investment. An individual stock is a speculation. Yes, you can lose a lot in an individual stock. It's just as foolish to own them as it is to own cryptocurrencies. So if you are considering getting into them, boy, does it look cheap now. Just remember, they don't necessarily have any intrinsic value, so they technically could go to zero. Thanks for listening to Talking Real Money Quick. Please, 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 please spread the word. Tell a friend or two about it. We'd really appreciate that. Leave a review on your favorite podcast service. Subscribe. It all helps. And remember, the clearinghouse for all the real investing information you could possibly want, and all of our other websites and the like, and the risk quiz and all of that is talkingrealmoney.com, talkingrealmoney.com. Oh, and one last very personal note. A couple of months ago, I started a new podcast just for fun because I like reading stories. And it is a hobby. It's purely a hobby. It's not designed to make me any money. But if you like listening to stories, like you want a 15-minute story on your commute, these are totally free, and they're available at every podcast service known to mankind, Apple Podcast being the biggest of them. But if you'd like to listen, it's called Lit Reading. Check it out at your favorite podcast service. Oh, and if you do use Apple Podcasts, I have a huge favor to ask. It is the most powerful service on the planet. So if you get a chance, in addition to leaving a review for Talking Real Money, if you could leave a review for Lit Reading, I would really appreciate it. So check it out. It's called Lit Reading, litreading.com, or on your favorite podcast service. And we'll be back next week with a couple of additional editions of Talking Real Money. I'm Don McDonald.
Talking Real Money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. Are we done now?